That's right. Bitcoin is still bullish. I think it's still bullish, and I'm going to be approaching it like I think it's still bullish because it makes sense to me. I'm going to explain to you guys exactly why it makes sense to me. I am hyped up because I don't know, I'm just super hyped up. But basically, also, these almonds are really, really good. I don't know what you guys think about almonds. They're fantastic. But let's start off with Bitcoin, why I think it's still bullish and how I'm approaching it. Now, my views in previous videos have not changed. They have not changed, and we're gonna go over that as well. But have you guys been looking at the Bitcoin supply and scarcity charts? Uh, I just like the Glassnode one. No real reason why I use. I just like the way it's laid out. But there's still more Bitcoin being taken away from circulation. There's a lot of background adoption still happening, and we know GameStop is building up their portfolio pretty well with Bitcoin. So I'm excited to see what opportunities GameStop has in the future. There might be another like massive pump or something. So I'm gonna be keeping an eye on it. We'll see how that goes. But Bitcoin itself, let's take a look at the bigger picture because we know. Well, I mean, a few reasons, right? It's like the last year of the bull cycle, which is this year in 2025, does not. It usually doesn't end this early in the year. Usually we can go sometime around October. We can go. We can go further into the year. So just time based, we're still good, right? We're still good. And let's see, when it comes anything besides time, well, Bitcoin supply and demand, like I showed you, that's still really, really strong on the demand side as supply weakens. What else? Well, if we were in this like last, if we did already pass, if this makes sense, the last stage of the highest point that we will see, it's also very, very, in my opinion, just silly to assume that the all-time high that we made earlier this year at just over 109,000, that we would then have enough momentum after the last bullish stage of Bitcoin. If that was the case, to have the last stage still create afterwards, still there's enough bullish momentum to create such an aggressive rally to make a new all-time high there. So just in the aspects of investor sentiment, just looking at the actual price action, this doesn't look like the end of the bull market. It really, really doesn't. And even if it was, and we just had like this random just quick pump at the end due to reasons just to pump it, well, we're still holding pretty well, and we haven't seen Bitcoin destroy even this consolidation. This higher low for this trend right here was not crushed very easily. And if there was no more buyers to still hold on to Bitcoin and still push it up a little bit, still keep it high, if all that really did end, we wouldn't be holding this level as well as we are. I'm not saying that I think we're gonna go up straight from here. I'm still looking at potential, a little bit of a better, bigger picture retracement before we can go much, much higher. And then the other thing on top of that is like, well, if Bitcoin did, that's it. We made, this is the last all-time high we're making over here, like at 112,000 basically. If this was also truly the case, well, we're still in this environment where Bitcoin is being suppressed with interest rates, right? So interest rates from the Fed and tariff fears. Like tariff fears are still a thing. They're still a thing, and they've been picking up a little bit more as of late. And we're still waiting on those interest rate cuts. Like we're still waiting on a lot of this to happen, and a lot of this is going to fuel a lot of inflows and money back into Bitcoin. So if we're just talking about purely like macroeconomic stuff, like there is, in my opinion, much greater reasoning on why we can still see higher prices of Bitcoin. Um, Instead of us just assuming the bull market's done. It's just all those are my reasons, right? But then when it comes to like how am I approaching it now, well, I've said this many times before too. I haven't said this lately, but if you guys have been following in 2024, I said this a lot, and I said this a lot earlier this year as well. But if we know, or at least we strongly believe, at least I strongly believe that Bitcoin still has more upside to go during all of this time, then it makes sense to have a core position, a core long position in the background, a multi-month long swing trade to take advantage of the rest of the bull rally as we continue through 2025. And then on a separate account or separate portfolio, you can be taking advantage, or even on the same one if you're using different tickers or different tradable, uh, tools. And then separately with smaller positions, take advantage of short-term trading. So you can still, you know, leverage your overall account by taking advantage of short-term trading and taking advantage of the overall picture. So that's the benefit of having a core position. But regardless of that, not everyone does that. So what does that mean? I am looking for short-term trading. I'm still looking for prices to come down a bit lower until it confirms an uptrend. Now, I will say this though. I will say this because even though I strongly believe Bitcoin could come down into this purple area before we can go much higher, like Bitcoin could easily come down to 85K. It'll create a bigger picture, proper retracement like we've seen in 2024. I gave that example. I gave a specific structure example a lot recently, so I'm not going to do it again. But this will be ideal. This will be ideal, and that's what I'm waiting on to begin accumulating aggressive short-term positions to then, ride it back up and finally start breaking into this green area where I plan to begin selling any positions that I accumulate in this area. But I will say this, I can easily be wrong. These are just measurement tools. And even though most of the time Bitcoin likes to have proper retracement, there is still those few times that it doesn't, which means it would also make sense to use, for example, just in my opinion, and it's the weekend, so I can't do any of this until Monday when the US market opens because I'm trading ETFs, not spot. But if Bitcoin still remains within this red area and doesn't break below this low, but if it does, then I'll just lower this yellow area a bit down to reflect the price coming down a little bit more into this red area. But to me, it makes sense to use red as short-term small position accumulation opportunity with a tight stop loss at these swing lows, because, or you can even just say, like, if you want to use previous retracement structures, in my opinion, I think that's absolutely acceptable as well, but it might be a little bit more of a stretch down lower depending on your risk tolerance. But to me, like 100K is a really good area, because if Bitcoin hits 100K and even slightly below, goes below 100K, then it opens the pathway to fill this purple area up quite well. And if it doesn't, so that's why the stop loss will be there to protect you and conserve capital, so then you can finally buy in at our major ultimate, like, great deal buy area in purple. But and that will be like, it doesn't say, but to me it's 85K to 100K, not 89K. It starts at the bottom of it's 85, even though it doesn't reflect it on there. But the thing is though, if it doesn't and it still holds some, momentum, like, it's great, because I mean the slower this goes down the better, because it causes less, like, fear to then just push it down overly aggressively. But we can easily see a correction, just like we've seen here when Bitcoin's up here and it came down. It had a corrective move higher that filled in the orange retracement area quite well. We're using the same type of retracement area in this we're using the yellow this time, but it's still the same thing, where it's factoring in the move down to calculate how high it can go for a corrective move higher before it continues to go down lower. And then this area will start acting not just as a resistance, but it will act as a way to potentially begin the assuming process that the purple area is invalidated and potentially we can go up into the green instead, and then we'll start looking at new structure up there. And that'll be if the price breaks over the yellow structure. At the moment, it's at 108.6K, but this can change dramatically as the weekend uh, completes and we enter into the next trading week. But as of right now, we have bearish momentum, so it's a good idea, just in my opinion, to accumulate, start shaving off, locking in profit for the opportunity to then buy back in at a much greater deal down here and then sell at the green. Now, this red area can still fill in a little bit more, in my opinion. We can still see that happen. But even though we have bearish momentum, the possibility of seeing a short-lived correction, which is much, much less likely than us just having the full correction, but it will just be the price breaking over the yellow. It can break over the yellow a little bit, like we've seen retracements get broken over a little bit, but basically it will be breaking over it, and we start seeing micro supports hold, indicating that there can be strong bullish momentum, and it will be micro supports just above the yellow, so strong bullish momentum to actually continue higher. Now that's absolutely possible. But I'm just throwing it out there because it's possible. I'm not completely pushing that out, but until we have that, or until we just find resistance in the yellow, if we go up higher, go down a little bit more before we go up higher right here, come back down, have a strong accumulation area, and that'll be ideal. But I'll keep you guys updated on what's going on. I'll keep you guys updated on my view, because there is a lot of potential to still trade smaller moves, make profit off of it as we wait for the bigger overall ideal move to present itself. So then we can buy more aggressively and then ride it all the way up to wherever the top is going to be this year. So I still believe we're in a bullish market. We're just having a correction, which is extremely common. So we're just approaching this in the most realistic way possible. So yeah, hopefully you guys enjoyed it, and I'll catch you guys on the next one.